Well, I think if you look at COVID-19, it had a number of impacts. The first is if you look at firms, they had to go back and look at their resiliency. Secondly, a lot of transactions in business moved online, so that increased the instances of cyber fraud. So it made cyber and resiliency as types of regulations became much more important. Well, if you look at, particularly with COVID-19, firms moved, everybody started working from home. There was traditionally a lot of paper in the process on the compliance side, where something might actually be initialed by somebody else because it was in the office. So it created enormous force for digitization. So today, a lot of people can work from home. A lot of regulatory functions and compliance are automated, and everything that people do is auditable. Well, I think one of the biggest challenges is regulatory risk is actually one of the biggest monetary risks for firms. So if you look at the levels of fines, they're in the order of magnitude of billions. So they become bigger risks for firms than market risk or credit risk for many banks. So I think a lot of banks need to start taking a more numerate and data-driven approach to regulatory risk. Well, if you look at what we do, we have a very data-driven approach, looking at regulatory risk as a class of risk. We assist firms where they can actually look at all of the regulatory notices that they come in. They can all in real time be risk ranked. And this is very helpful for firms, A, to send things to the right place, and B, so that they can actually prioritize what has to be actioned. Because the reality is there are so many things need to be actioned by various regulators around the world. Some are perfunctory and some are of enormous risk to the bank, and we facilitate managing this. Well, regulators have actually been asking for it. So, for example, there was a very significant development in Australia where the Royal Commission actually investigated a lot of banks, and they actually found that when it came to conduct risk, the banks weren't seeing conduct risk as a risk, and had they actually taken a risk-based approach that we manage, it would have saved the banks from some very poor outcomes. So ultimately, it leads to much better outcomes for banks if they can take this approach. We've been working for almost 10 years on developing models in terms of ranking risk. We've been spending a lot of that time developing accuracy and consistency in this area. So a lot of people now look at the Corlytics information as the golden copy in this area. In other words, they can automate of how we classified the information because they can be assured of its accuracy and consistency. I think if you look at the US has been very active in RegTech. I think we're now seeing a lot of adoption at scale. I think the issue a lot of the US firms have, a lot of the global banks are here and they have the largest scale. So some of the biggest scale players in the world are here. And they're interested in this working, not in terms of proof of concept or as a pilot or as part of the bank. They're looking for a bank-wide initiative at scale, and firms like ourselves can manage that scale, and that's really what's been the catalyst for the industry taking off.